Welcome back. Today, I'm going to talk about a new reporting requirement that is imperative for you to know that starts in 2024. So we have less than a year to prepare for this, and you should be thinking about this on any new investments, businesses that you have going forward, because it's going to create quite a compliance burden for a lot of people. So this is the new FinCEN requirement for certain legal entities and reporting on its beneficial owners or owners of the business. First of all, let's talk about what FinCEN is. FinCEN is the Financial Crimes Enforcement Network, which is essentially a part of the US Treasury and was created in order to fight against money laundering and terrorism financing, among other things. FinCEN has been around for a long time and has had a lot of reporting requirements that are already in existence. For example, there are a lot of reporting obligations for banks for like suspicious deposits or any deposits of amounts or transactions over $10,000. There's also requirements for US citizens and residents to report any financial accounts that are held outside the US. So there's already a lot of reporting, but now they're expanding it to include certain legal entities and reporting on its owners. So starting in 2024, LLCs, as well as corporations and any entity that is created by filing with the Secretary of State or similar entity in a state, is going to be required to file a report of beneficial ownership. This form will require LLCs to report certain information on its beneficial owners, which are those that own either directly or indirectly 25% or more of the business, or anyone that essentially exercises control over the entity. So notice how I said directly or indirectly. That means if you own an LLC, and even though you don't directly own it in your name, if you own it through another type of entity, say another LLC, and you have an LLC underneath it, but when you go through the ownership, you effectively own at least 25%, well, then you're going to be one of the beneficial owners that are required to be reported. Also, when you exercise control, that could essentially be a manager or anyone that can make decisions on behalf of the entity or open bank accounts for it. Anything like that. Even if that person that exercises control doesn't have 25% or more ownership, they will be required to be reported on this form. The type of information that they're going to require on the form is the name of the owners, social securities of the owners, date of birth, addresses, the date the individual became an owner, and the ownership percentage in the entity. So quite a bit of information. Now, there are two different deadlines depending on when an entity is created. If an entity was created or in existence before January 1st of 2024, then they will have until January 1st of 2025 to file the initial report. For any entities created after January 1st, 2024, they'll have 30 calendar days to file the initial report. Now, you're also required, if you make a change to the LLC or other reportable entity, you're required to file updated reports. So every time you have a change that would alter the report that's on file, you'll have to report that change within 30 calendar days also. Now, as you can imagine, if you have a lot of LLCs, so if you set up a different LLC for every investment that you have, every real estate venture, or maybe every partnership that you're in, well, that could be a pretty hefty burden for a lot of people. And not only is it a hefty burden in terms of compliance and filing, but there are also heavy penalties for not complying with this. So they start at $500 a day that it's late and go up to $10,000 maximum. Now, that's for civil penalties. If someone willfully does not file, then those penalties could be higher. So the cost of not doing this is going to be pretty high. So you want to start making sure that you are keeping track of this pretty soon so you don't miss these filing obligations. Like I said earlier, this doesn't just apply to LLCs, but it also applies to corporations and any other type of entity that is created by filing with a Secretary of State. So this can oftentimes include general partnerships, limited liability partnerships, pretty much most entities. So if you have any type of legal entity, you'll definitely want to look into whether you have to file these reports to make sure they'll be considered. These requirements will be one more burden for small businesses, but it's something that you should not just forget about and definitely want to take care of.